Please enjoy our next Dynamics Con session. And don't forget to enter your questions into the conference chat where our speakers are ready to engage with you. Thank you for attending Dynamics Con.
Hello, and thank you for having us participate in today's webinar. It's my pleasure to be presenting to you today on behalf of Dynamics Con 2021. And today's webinar is called Using Corporate Performance Management to Improve Financial Results. So the goal of today is to basically get you a little bit more familiar with something called Corporate Performance Management, which we'll call CPM to shorten it from here on out. And then also what we're going to do is actually talk a little bit how that fits and optimizes other solutions like your ERP, your business intelligence software. And then we'll start talking about how then corporate performance management or CPM can be used as a better tool for financial planning and reporting to help improve a business's financial results. And please note, actually, we've left time at the end of this webinar for a Q&A session. So I look forward to actually answering all of your questions if you have any at the end of this session. So at that point, let's jump right into this webinar here. So first off, a little bit about me. My name is Wayne Slater. I'm the Director of Product Marketing at Profix. And for about 25 years, I've been helping organizations solve their product and business growth problems. And during that time, you can say I've spent roughly about 10 of those years helping companies optimize their efficiency and profitability through this selection and implementation of business software like enterprise resource management, corporate performance management, which we're going to talk a little bit about today, and other things like manufacturing execution systems. I've also spent a bit of time writing a couple books too. So I've written a couple dummies books in my past, and then prior to Profix, I had the pleasure of working at such companies like CISPRO, IBM, and Hummingbird Communications. So let's move on into what are we going to talk about today. So first, we're going to dive into some challenges facing finance professionals, and then we're going to talk a bit about spreadsheets and the good and the bad of reporting using our ERP systems. And then we're going to talk about more advanced reporting tools and how they can help. And then we'll introduce corporate performance management. And then from there, we'll get into how it works and how it can make your life a lot easier when you're doing things like reporting, budgeting, planning, and that includes things like forecasting as well. So how about 2020? Like, first off, wow, like what a year that was. And then now, when you start looking into 2021, where I think we were thinking, everything would kind of be solved and things would be moving forward and things. But, the beginning of 2021 has just been as unpredictable as 2020. So this is one of those things I think we'll be telling our grandkids about for years. But really why I want to take you back to 2020 is I remember fondly back, and I think many of us do in finance, back to when we had just wrapped up our 2020 plans. And that was probably back in like January, February, and we're just kind of like kicking them off. And then as usual, there was that kind of feeling of accomplishment and relief that the plans are finally baked and we're moving forward with the year. And then who in their wildest dreams would have imagined, this thing happening, which was the good old COVID-19. And then by March, April, many of the lockdowns in many regions of the world started to occur. And there was a lot of financial and market impacts associated with that. And then, of course, that a lot of those impacts forced many of us to throw away our budgets and forecasts we'd worked so hard on. And suddenly we had to replan like we never had before. So now, here we were trying to plan in a world full of uncertainty and chaos. And of course, like always in finance, we simply didn't have the available time to conveniently, kind of like, let's tackle this new challenge because, I've got all sorts of free time, right? And so you're going to hear, you've probably heard a lot of buzzwords now that are being thrown around the financial community. Things like agility, finance needs to be more agile. But, the question is how? And given all of the pulls on, what basically the things that pull on the finance teams today, and then, couple that with the facts that many markets and industries are just no longer as predictable as they once were. We really need to actually think about there's a better way of getting into like handling our plans and things like that. So if there was one thing that 2020 has taught us, now is the time for finance to redefine its mission to achieve its long-stated goal to become more of a strategic partner to the rest of the organization. And like I was talking about earlier, when the lockdowns occurred and really started to make their impact on the economy, it resulted in many of us scrambling to triage things like immediately jumping into cash flow and then looking at our liquidity situations in what was now a very uncertain world. And then in addition, there was also an immediate need to go back to the drawing board and plan our new paths and plan them faster. And then also while trying to address any variety of uncertain outcomes. And then we also needed to do this faster than we ever had done so before. So again, this only compounded our already busy day-to-day challenges that we already had moving into this. And now planning that was all of the, basically a planning processes that already needed improving. Now we were tasked to do even more frequently and do it faster. So let's talk about some tools right now that we've been using for years. And we'll start associating this with other software solutions. So for many organizations, the need to reduce their dependence on spreadsheet-only planning has actually been a long-standing reason why corporate performance management software exists today. And, we can't escape the fact that spreadsheets are one of the most widely used tools in finance and are absolutely awesome for entering and manipulating numbers. But we also as much as we love these things, we also love to hate them. And there are certain situations where you really should move beyond those beloved spreadsheets and look to something else to help achieve the agility I was talking about earlier that you're going to need to be able to plan your way forward. So here are some of the scenarios where using spreadsheets can lead to time-consuming and costly errors. So first things is spreadsheets, as we all know, if they can get extremely large. And the bigger your spreadsheet gets, the more complicated it is. But also there's some fantastic data out there that basically tells us the typical spreadsheet, normally a budgeting spreadsheet in particular, normally contains about 4% of the data in the spreadsheet is actually errors. So the larger the spreadsheet you have, the larger the chance it's not accurate, and it's going to be increasingly not accurate the larger it gets. And then also, as we know, we probably, any one of us at one time has probably sent the wrong file to someone. Spreadsheets do lack the necessary security you would need in some cases. So, there are times where data needs to be hidden from some readers. Like you could just imagine if you sent the, payroll or management pay, schemes out to the wrong group of people, that could actually get a little heated in a company. And then, there's another example where, if you believe you have to enlarge your model or your database significantly. So as you know, companies grow, and so do the complexities of your spreadsheets. So scalability is tricky. It's already not easy to, kind of maintain a database of like 2,000 items. But when your database becomes like, contains like 20,000 or 200,000 items, to now do it correctly and do it manually in spreadsheets, it just kind of gets crazy. And I've actually seen this before. I've seen spreadsheets that are actually like 50 megabytes big, and I can't even imagine who was actually maintaining something of that size. And then, the thing that's kind of more near and dear to my heart is planning using spreadsheets alone is simply taking too much time. And this is tied back to what I was talking about earlier. We've all tried to get those, when we're budgeting, try to get the numbers sent back to us in a timely fashion, and then versioning and accuracy play roles and further delaying, getting budgeting done. And we all live this, if you've in finance, you've all lived this, where it's like, not only that, it's actually tracking down the people you need to get to send you the stuff when you need them to send it to you. All of that is actually just tied to delays. And that's when, when things like, spreadsheets don't become the right tool. So let's now talk about ERPs. And ERPs are, again, awesome tools. But long before Microsoft came out, I want to talk a little bit about, just almost rewind the clock in a sense. Before there was Excel, anyone remember there was other spreadsheets before that, right? Like who remembers Lotus 123, or God, I'm even old enough to remember something called VisiCalc. And these were early financial solutions, to crunch numbers faster and more accurately. And of course, they were all kind of superseded by Microsoft Excel. But remember I was telling you, like, spreadsheets are not always the right tool for certain things. Well, that's why, in the software industry, we've come out with like business solutions. So there's a reason why accounting software came out, and then accounting software kind of evolved into ERPs and things like that. is really, it's really talking about now how has the evolution of finance and the software that they're using kind of like moved forward. So one of the things I want to share with you is that, like ERP systems are really powerful tools for running your business and providing a 360-degree view of your business. And they're designed to collect all sorts of business data, capture your sales orders, track inventory, and do so much more. But most importantly, this is the home of your general ledger and your financials. And what they're designed to do is actually, improve visibility, provide you their insights through reporting. And that's a big part of ERPs is actually the reporting systems. But again, when you start implementing an ERP system across departments, it means you're basically, now you've actually got your organization has a single unified reporting system for every process. And by having a single source of the truth, an ERP system can readily generate useful reports and analytics anytime, such as income, cash flow, profitability, costs, overhead, all those type of statements. However, where reporting systems in ERP systems fall short is that they are not purpose-built to facilitate and automate the planning process for a business. They will provide you much of the raw data you will need for your budgeting and forecasting, but you will still need to export the data into spreadsheets and manually execute on your planning process. And many ERP vendors will try and streamline the planning process through the customization of the ERP solution and by telling you need to implement certain processes. And while this will help reduce the planning burden, it will not automate or remove the limitations associated with just using spreadsheets alone. And it's also important to note that most ERP customizations can be expensive and require ongoing maintenance as your business evolves. There are vendors out there that sell advanced reporting tools that layer on top of ERP systems. These software tools are designed to provide greater insights and more impactful visuals than traditional ERP reporting. One of the most popular forms of advanced reporting is known as business intelligence, such as Power BI. And BI software is one of the most sought after and popular software solutions today. So remember what I said earlier about increasing the increasing amount of data being collected today. Well, BI helps organizations make sense of that data by providing business analytics, data mining, and data visualization. And in addition, they provide tools to help make better data-driven decisions. And it leverages software and services to transform data into actionable insights that inform an organization's strategic and tactical business decisions. So this type of analysis is typically used by companies to help them identify ways to increase profit, analyze customer behavior, and then compare data with competitors. In addition, these systems come with reporting features that create data visualizations. And data visualizations are the visual reports, such as the charts and the graphs, that make analyzing the results of data much easier to understand. And so key features of BI systems include nice-looking dashboards, graphic visualizations, detailed reporting, and also data mining. And many BI systems also feature a data warehouse, which stores your data and provides access to it when you perform an analysis. And sometimes, though, business intelligence is often confused with corporate performance management. And this is where I'm going to start drawing a different line here, because it's not corporate performance management. The analysis and reports in BI solutions are designed and should be used to help you determine your company's goals. And now what we want to do is talk about corporate performance management. So, well, CPM is sometimes also classified, depending on who you talk to or what analysts report. Sometimes it's known as BPM, which is Business Performance Management, or Enterprise Performance Management, known as EPM. And even Gartner, I think, started to call the category slightly different. I think they're calling it XP&A in a sense. But really, in other words, CPM helps track your progress by measuring the key performance indicators, KPIs, and metrics basically as your company works towards its goals. So remember I was telling you BI actually is the tool to help establish what your goals are. Well, corporate performance management is basically the tool you're going to use to help you make sure you're heading in the right direction and going to achieve your goals. And basically the software does it by offering an out-of-the-box planning, forecasting, and budgeting solution. And it's purpose-built for financial planning, reporting, and analysis. So as you can see on the screen there, CPM tools can have a broad range of functionality, but all of them will have a focus on reporting, budgeting, planning, and actually close as well. So broad planning tools are important to simplify and expedite a company's planning process. Then you've got your reporting tools and analytics enable you to drill into the data in order to help you make better business decisions. And some CPM tools provide additional value, such as workflow and automation tools, to help facilitate the planning process and drive it forward. The whole idea is shrinking the windows of these FP&A processes like budgeting, forecasting, close. The less time you spend doing that stuff, the more time you can spend doing more important stuff. And then some CPM vendors also are including artificial intelligence capabilities to further automate things. But we'll talk about that in just a second. So, I like to throw in some analyst information into these slide decks. But when companies typically go looking for CPM solutions, they're most likely looking to address one of the following. And this is actually some recent stats from an analyst firm called BPM Partners. But really what they're looking at to improve typically is they want to do better planning. They want improved reporting. They'd like better analytics, the ability to build financial models. Again, this is something that typically happens in Excel. We'll actually build them in the tool. Actually, you'll get a lot more out of it. And providing users again with visually appealing dashboards on financial performance, and those quite often those are customizable. And then some want their CPM software solutions to help them consolidate and close their books as well. And some CPM solutions can actually do that and do that quite well. So we've just mentioned a bunch of tools that have evolved over the years to help finance work more efficiently, but sometimes there is confusion over when to use what. So first off, enterprise resource planning. Again, that's your key business application. You need it. It contains much of the data you need to help you with your planning, and really like the GL and your APs and ARs all in your ERP. But remember, by itself, it's not an efficient financial planning platform like CPM. And again, the reason why is in order to get into a proper planning process, you still have to basically export almost everything into a manual process powered by spreadsheets, and do your budgeting and your forecasting that way. And then we talked about advanced reporting software solutions that you can add to an ERP solution that are designed to give users greater flexibility when it comes to analyzing and visualizing their data. And then there's also business intelligence software. And we talked about this. This is a very powerful tool companies will use to actually help them determine their company goals through the year. And then, when we get into, generating reports, data visualization, and management, there's a lot of similarities between, kind of like BI and CPM. But then there's some crucial differences, again, that basically differentiate the two. And actually, when working together, they're actually a very, very powerful solution. So again, I just want to remind everyone that the corporate performance management is a purpose-built solution to facilitate the financial planning process. And where BI software helps basically a company, like I was saying, determine its goals, CPM will help you achieve them. And it's going to integrate, it does this by integrating with your accounting package and your other applications as well. It's going to do this by integrating with your BI software. It's going to integrate with your CRM systems. It's going to integrate with your HR and personal planning software as well. And really what you're basically going to do is it's going to give you a single view of your financial truth in order to enable you to plan faster. So we talked a little bit about this earlier. I won't spend a lot of time on this, but again, corporate performance management is also known as a lot of other things out there. But at the end of the day, it is corporate performance management, and that's what we're talking about today. I won't spend too much time on this slide here, but moving forward, let's talk about when you get into using corporate performance management software and when you're planning, let's talk about how CPM can actually help. So we actually have a concept at Profix and in many of the corporate performance management software vendors that talks about the effectiveness of a thing called CrossCompany Planning. And it's really there to help with, as your company grows and you get more data, the complexity of everything you do from an FP&A process increases. So the complexity just keeps going up. And that can include things like your company size. Now you've got maybe added geographic locations. Now you're dealing with multiple currencies, and you may, because of your geographic locations, have separate ERP systems and business systems that you're also using disparately throughout the world. So sometimes you have siloed systems. And now, but as a company, you're still trying to plan, and you have all these manual processes that are going around that are increasing the complexity of your cross-company planning. So again, you really aren't kind of like, at this point, you don't have a single view of your financial truth that I talked about earlier. And so now what we basically like to do is, what are the pillars of cross-company financial planning? So to help expedite your business's ability to react to changing markets and plan better, there are three elements to successfully expedite any planning process. And I always say those are people, process, and technology. First off, the people. When you're involved in planning, it's quite often, I think if there's any finance people on this webinar, you'll probably nod that I say, it's quite often the planning seems to be something that is driven by the finance team. It seems like finance has the biggest interest in this and everyone else has to kind of go along with it, right? But in order to make it more effective and probably get it kind of like more empowered in the organization, what we need to do in finance is make it basically almost like a corporate level objective of everyone who would be involved at a senior level in the planning process. So that's including including and empowering the right roles across the company into the planning process, but also foster an environment for collaboration. It's important to note that this, again, it's not just a finance department process. This is a C-suite endorsed thing. And it needs to occur, and it needs to be it needs to occur in a certain amount of time, and people need to be held accountable. And kind of once you're identified the right people, you need to make sure that they are brought to the table and properly motivated. And then underneath all of that, once you've got everyone properly motivated, you're going to need a process. So about the process, it's a good best practice to map your planning cycle and have regular and accountable touch points. Keep your stakeholders engaged. That's the key here. Don't just give them a spreadsheet and send them away. No, they're part of a process, and there needs to be frequent touch points. They need to be engaged and held accountable. And the process will help you do that through effective and collaborative touch points. And really what that'll do is help them become more responsive to you and then effective throughout the planning process. And then finally, there's technology. We've talked about people and we've talked about process. Now the technology. And really what you need to do is underpin basically your process with technology that integrates with all your business systems around the world and then gives you that single view into your financial truth. But it's also a tool that's purpose-built to bring the people and process together and drive your processes through workflow management. So this is key. You're going to see some of this a bit later. We're going to talk about these workflows and how they help automate the planning process to more easily facilitate budgeting and planning, forecasting, all that sort of stuff. And then also providing the insights to the stakeholders that they're also going to enable. That's also going to enable them to provide real-time data entry into budgets and forecasts, basically helping all of us to plan faster. And again, what we're talking about here is corporate performance management. So let's talk now about what's happened over the last year or so. You've probably heard the term continuous planning used. And what it is a term used to describe a highly collaborative, action-orientated approach to corporate planning. And what it's basically built on is frequent but very short planning cycles. So the style of planning enables organizations to enhance the relevance and accuracy of their plans for three reasons. First, it builds an integrated operational financial plan rather than just a budget. So it's kind of integrated into your planning DNA. Secondly, it's a high participation planning exercise, which creates a single integrated view of the individual department or line of business plans. And then the last thing it is that the plans are created and updated frequently using very short cycles with a rolling time horizon focused on key drivers rather than a highly detailed and time-consuming bottom-up process. So, when we start talking, about things like, we get into things like, most financial analysts report today that corporate planning is flawed. Planning takes too long, as we've talked about earlier, and it really hampers an organization's ability to react to changing market conditions in a timely fashion. And this is due to the fact that, again, most planning exercises are still too siloed, and cross-company planning, powered by the right software in this case, which is Profix I'm talking about right now, will improve your planning agility and provide you the tools to continuously plan. And in this age of COVID and just the incredible amount of uncertainty that's going on around it, one thing that is certain is that almost all organizations need to be continuously planning and seeing their way through the pandemic and beyond. And some of us question whether this is even the new normal or whether it'll go back to static planning. I doubt it. I think we've hit the age of dynamic planning or continuous planning, as you're hearing a lot of people talk about today. So some quick notes on how corporate performance management works. So we talked earlier about all the data silos everywhere in your disparate accounting software, ERP systems, CRMs, and HR. Then you also have typically multiple departments that are currently, and throughout those departments, the exchange of data is normally being facilitated manually, and quite often the vehicle is spreadsheets. And what basically the whole goal is here is that with increasing amount of data and the various systems that are being outputted to and managed by those spreadsheets, getting to the bottom of an issue can be frustrating and time consuming, and quite often cause many of us in finance to work evenings or even weekends. So what corporate performance management does in this case is removes the complexity of the data integration. So basically your CPM solution becomes the hub of all of your data. And now all your financial data is available to work with in one single application. So there's no more silos anymore. There's no more exchanging data from all the different systems manually. Profix or your CPM solution becomes the single view of your financial truth. And basically what it basically does now is enable you from a single application. All of your financial data is centralized, and now you can kind of collect, analyze, and drill into and report on all of that financial data from a single application. And then a lot of CPM tools from a user perspective provide intuitive dashboards. And most dashboards should be designed for specific roles in mind. So whether you're an analyst or you're the controller, you're the CFO, it should contain the relevant information for you. And I want to dive into just how a user would use Profix as part of a planning process. So I would actually go over to like the right-hand side of my section here, and on my dashboard there's a section called My Tasks. And you'll note in the My Task section, there's a task assigned to me as part of a workflow, which is called OpEx planning. So one of the jobs I've got to get to is get to my OpEx planning job. So I would click on that. And just before I will show you what the OpEx plan looks like, I want to talk to you about how the workflow works. So that task was assigned to me as part of a workflow. So we talked earlier about corporate performance management being a tool to drive collaboration and process. Well, here's an example of a workflow. And in that workflow, it contains something that's got to get done as part of the planning process, which is the OpEx budget. And so the OpEx budget has been assigned to me, and that's why it appeared on my dashboard. So when I clicked on it, it will now open up into the operation or the OpEx planning budget task. So what you're seeing in front of you now is corporate performance management. It may look like a spreadsheet, it may act like a spreadsheet, but believe me, it's no spreadsheet. And here's where you and your teammates can interact with the budgeting models in real time. And all the changes appear immediately. There's also versioning in case you need to fall back to a prior version. I've been part of budgeting processes where we've gone like 17 versions deep and then fell back to like version 12. So that's kind of valuable. And all these start at the departmental or regional level and then can roll right up to the enterprise budget. And all of the numbers can be drilled into for further analysis or refinement. So there's no time wasted opening, rolling up, and digging through different versions of Excel spreadsheets. All the information is right there in the tool, but you actually interact with the data in just like you would in a spreadsheet, though. So you can actually enter formulas, or you can enter raw data and things like that. But now you're in a single unified system to do so, and everyone knows that the data is being updated in real time. And then we'll talk a little bit about forecasting in the system too. So like so many of us, the budgets and forecasts we built and put in place, early last year were pretty much obsolete, again, thanks to COVID-19 and everything that brought with it. But so what's really happened now is things have kind of changed a bit. So now that, conditions are changing so rapidly, there's a new best practice in finance. So, where you've had to move beyond static forecasting into like rolling forecasts now. So, basically what that means is you pretty much are doing rolling forecasts all the time, dynamically. Pretty much as you get new data, you should be updating your forecasts. So what you're seeing in front of you is a forecast planning sheet. And again, that's in, the CPM solution. So again, it looks like a spreadsheet, but it's not a spreadsheet. What it is an integrated and consolidated view of your most recent revenue forecast. So in this revenue forecast, you will see that Q1 and Q2 were already complete. Basically the software is automatically pulled in the actuals into the report from the ERP system. So what you're seeing on the left there in the blue is actuals, and that's now pulled automatically from the ERP system. So remember before you would have to go get do a manual data pull and put it in a spreadsheet if you were using spreadsheets before, where the system is that integrated. Now when I'm doing a budget or doing a forecast, my actuals can get pulled right in. And then the section in the yellow represents our new forecast estimates for the next 12 months. And this is where now I can manipulate the forecasting data and trend what I need to do and input my new numbers. And basically, all the remaining months can just be easily manipulated using the existing data in the system. And again, I can do some really interesting tools use tools in here like spreading tools and things like that, or just do manual data entry again, like I would in Excel. And basically when I'm all happy, I would just basically save this information. It would go back through some sort of workflow where things would get authorized and approved. And there you go, voila, the next version of your forecast is done. And then when we also can look at let's actually talk a bit about some forecasting stats for a second. So, I think we all agree, most of us would like to be forecasting more often, but there are a lot of companies still are having a hard time doing this. And, when we looked again to our analyst firm, BPM Partners, they came back and said, basically, a lot of companies are citing that they just don't have the technology or the time to actually be able to forecast more frequently. So this is still an issue. So that's covering off on forecasting there. But forecasting leads into another interesting option, which is actually a thing that they do in FP&A called scenario planning. And as a vendor of CPM software, we've believed ever since we started selling software that people should be doing scenarios, like future state scenarios, and actually doing them often. But most people just buy budgeting software to do budgets, reporting, maybe do some forecasting in it, things like that. But then when COVID happened, basically all of a sudden, scenario planning became like super popular within the platform, and this is kind of where CPM software shines. And it does this because CPM easily facilitates the building of scenarios, again, using the tool, by enabling quick and easy alternative models to be built from existing budgets and forecasts. So since your prior forecasts are live and available and fully integrated with all of your other financial systems, CPM gives you the ability to model an endless array of possible scenarios based on changes in revenue, cost, personnel, and so much more. And it's interesting because you can do it several ways. You can dive really deep in the detail, into the details, and do some forensic level changes. Or you could just, as you see on the screen here, do very high level basically assumptions. And you could actually just do like, hey, I'm expecting, let's do scenarios where maybe the revenue drops by 15% or increases by 15%. And everything underneath will actually allocate dynamically for that. So it gives you the ability to create scenarios, not in days or hours, but it would normally take you on spreadsheets, but you could do it in mere minutes, sometimes even seconds, using a CPM tool. So, leveraging CPM for scenario modeling is really a way for businesses to quickly build any number of models, equipping them with the information they need to kind of adjust and plan for basically an uncertain future. And as we know, no one knows what the future is going to hold. But really what it is at the end of the day, no other tool will facilitate, faster or more easier scenario building than CPM. And the same will actually be said for forecasts and also budgeting as well. And, I won't keep going on, but the same thing is the same rules apply for doing things like cash flow and stuff like that as well. It's a very effective tool to making sure that, cash flow, which is the lifeline of the company, is you can maintain a level of profitability and making sure that you're staying on top of everything that's related to cash flow. So earlier, I kind of mentioned some CPM vendors were also starting to implement artificial intelligence technology into their solutions. So when you think about why AI would exist in a CPM solution, a lot of people think, well, it's going to replace finance people and things like that, and definitely not. It's definitely not going to do that. The whole idea of CPM solutions, it's about automation. Basically, the more we can automate a process, or the more we can automate getting insights out of the system faster so people can make better decisions, this is where the artificial intelligence in CPM solution shines. So right now I want to talk to you about three kind of popular technologies that are in the CPM solution that we represent right now. And the first one is probably most familiar to most people, is something called Task Assistant. And Task Assistant is powered by natural language AI. And this is kind of like your Siri or Alexa into a corporate performance management tool. So you can ask, Profix to kind of run a report or distribute the report or run a process for you and things. As opposed to you physically having to type everything out and do it, Profix will just actually go ahead and do it. The second kind of thing where it will actually help with something called insights. And Insights also uses natural language AI. But what that is basically designed to do is automatically write or tell you the detailed narrative behind your dashboard KPI charts, or explain the right narrative behind a contribution analysis, such as what factors drove the variance between two data points, maybe such as revenue this year versus last year. And that's kind of there, and will continue to be built upon to be able to kind of give everyone consistent information on the visuals they were looking at. So whether it's a VP of sales or an analyst looking at the same chart or looking at what drove a variance, everyone's on the same page, so for consistency. And then there's another interesting tool. We call it anomaly detection. It uses machine learning AI. And the goal of this is actually to quickly surface anomalies or risky transactions lurking in your data. And so why we use it is because a lot of times when you go into financial close, the close gets delayed by rooting out anomalous transactions or uncovering risk or just things that were wrong with your data that was in your GL, your accounts payable or accounts receivable. So what this does is actually, it's almost like a pre-audit of your data before you go into close. Actually, we run anomaly detection, and it uses machine learning, and it goes through all of your transactions at incredible speed. And it uses these things called control points. And what these control points basically do is they basically identify risk. And then what they'll do is at the end of your analysis, you're presented with all your risk in your transactions. So if you have like 3,000 transactions you ran last month, it'll say 2,900 of them look totally fine. 47 of them look like they actually have some sort of issues. And there's 2 that are like, holy cow, you've got to get to them really fast. And what this basically does is basically expedite the investigation. You can go clean up all of your data that looks like it's not properly inputted or maybe going to the wrong account, and get that cleaned up before you go into close, therefore expediting your close, which is fantastic. Because I know a lot of people are looking to shorten their close cycles. I think there was some interesting stats that talked about companies spend roughly about 6.5 days a month in close, which I think aggregates out to like 18 weeks a year just closing your books. So what we look at this to do is basically the whole idea is to take the automation and the time-saving capabilities of corporate performance management to the next level. Moving on beyond anomaly detection, let's take a look at now what the benefits people receive from implementing a corporate performance management solution. So basically, the number one benefit they experience is much better reporting and analysis. And I think a lot of that's got to do with all the data being in one place, but also the automated report creation and distribution capabilities not only save a ton of time, but they also make sure your reports are as accurate as humanly possible. And then, of course, our customers also like the easier access to financial information. 65% of them are citing that it's dramatically shortened their planning cycles. And this is key to what we were talking about today. Now that because of COVID and market uncertainty, we're now in a mode of continuous planning. So the whole idea is to be able to enable yourself to forecast more frequently, get those, continually build those scenarios, make sure that your budgets are always basically up to date. And really making sure that everything is, all your FP&A processes are really running in a continuous fashion. Whereas before we were doing static planning, now you're doing continuous planning. It mitigates a lot of business risk. And then, really at the end of the day, moving on from the benefits, what we also like to talk about is really some of the returns on investment. So I think I've got one more. Oh. There, I'm going to move around on the slide deck a bit, is this here. So in addition to all the time savings, the increasing accuracy when it comes to planning and things like that, one thing that a fantastic analyst report that came out last November cited is that really companies that implement corporate performance management are basically getting a fantastic return on investment. So this was really great research, right? So what it basically says is every for $1 invested in corporate performance management, you're getting about a $3.18 return on investment or benefit. And the primary drivers of this return on investment came from basically increased revenue because you had greater accuracy and better planning capability. There was reduced operational costs. Not only were you on top of your costs from a numbers perspective, you were doing things faster and more efficiently. And that also led to, improved organizational visibility, because now you actually have a fantastic reporting tool that's, integrated with all of your business systems. So again, everyone with a view into this tool based on their role, has a holistic view of what's going on in their world. Or if you're at the C-level, you've got a holistic view of what's going on financially within the company. So it's going to go back here. So now let's kind of talk a little bit about, let's start wrapping up this session here. So really, as we already know, I've really only touched on the tip of the iceberg. I could talk about corporate performance management for hours, but I think I've got 40 minutes today they give me. So I've had to kind of skim through a lot of stuff. But really what I wanted to do is just make sure you highlight to you that, CPM software, when used by the right people, utilizing the right process, and then you underpin it with the right technology, which is corporate performance management, can basically, at the end of the day, enable better collaboration and align, your key stakeholders across departments. And this results in faster, accurate, and more frequent decision-making. This will accelerate the budget cycle and also improve the frequency of forecasting with rolling forecasts or even dynamic forecasts, just keep going in real time. And you're also going to be way better. You're going to have much better ability to manage costs against sales forecasts, streamline your personnel planning process, because again, you've got that holistic view, everything's tied together. And then when you're able to do all that, you're going to basically reduce your business risk. And all of this is going to come with a massive savings in time for the finance team. And it's also going to, and it also does this by reducing your dependency on spreadsheets and all those manual processes you had before. And really all this results in kind of keeping the organization focused on its goals by providing a clearer view of today and a much better plan of the future. And again, I want to remind you that now we've actually saved this time at the end of the webinar for an open QA session. So at this point, I stand by and look forward to your questions. Thank you very much for having me. Let's move on to the QA portion of this webinar now.
Hi, everyone. So I'm Wayne. Just kidding. He had to jump off. He had to go tell his virtual financial assistant to go run a bunch of reports for him. So I may as well start off by introducing myself. My name is Kasha, and I work with Wayne at Profix. I've spent 4 years in the CPM space. 3 of those were spent working hands-on with clients to configure their CPM systems to meet their needs. With the philosophy that, you get them up and running, really you're training the trainer so that they are empowered to use the system going forward and, build new models, that sort of a thing. So I've been the shoulder to cry on for my customers based off their common pain points being on a finance team. However, that's just on day 1 of implementation. When I ask them what their pain points are, day 2 we're already working on eliminating with implementing CPM. In the last year, I actually was part of the internal finance team at Profix, so working on setting up new operational modeling and our own CPM instance. So yes, we use our own software. I can definitely say that I've been a little spoiled by entering the team with an established CPM software. So something like pushing out report binders monthly, that was a matter of a few minutes, or even eliminating entries monthly, matter of a few minutes. So that's a little bit about me. I guess we'll jump into some questions, right, Catherine?
Yeah, hi, I'm Catherine, and as you can see, this is Wayne's lovely replacement for today. Wayne had the opportunity to do some visits during this COVID time. And I just wanted to thank you all for being here. And I'm going to jump right into it and get some questions going for Kesha. So how long does it typically take to roll out Profix in an organization?
So that's a great question. I'm sure everyone on the call has probably been in some capacity involved with an ERP implementation. So I can tell you one thing, it's not going to take as long as an ERP implementation. But, I'm going to answer this with everyone's favorite kind of diplomatic answer, which is it sort of depends. I'd say the number 1 variable that distinguishes whether a project maybe runs longer than the average is the cleanliness of underlying data. just because that it has implications on the framework and how we approach solution design. So kind of in a, you're only as good as your data is clean. But since you all use Dynamics, then good news, you're in the clear. I'd say, to answer the question directly, it probably takes, it takes about, I'd say the average length of a project for a mid-sized company is about 3 to 4 weeks. So we get financial reporting modules up and running, as well as budgeting, which includes bottom-up personnel planning. And then for perspective, personally, the longest project I've ever implemented had lasted 8 months, but it was for a multinational company where we were implementing multiple regions at a time. So you can obviously tell that would be a little bit more complex than your average standard mid-sized company. Great question.
Okay. We did have a question in the chat box earlier, just sort of about what the cost of implementing, a CMP system would be. And I think that we're going to leave that one out because there are so many complexities and levels and inclusions in it that it's even difficult to give any sort of accurate answer. And that goes back to what you were just saying about, it depends on the complexity and what's involved. But Dalton, if you're at all interested, I'd be happy to connect you with somebody who could give you a much better sort of synopsis on that. Who are the typical users of the system? And are there different types of users?
Oh, that's a great question. So you can kind of think of it as a growing base of users. So let's say you're kind of past the implementation phase. In the first couple of months, maybe you want to do like a soft rollout. So you just do it to your core finance team. Make sure everyone kind of is up to spec on knowing how to create a dashboard real quick. And then come budget months, that's when you bring in some more users like budget owners, and they have their first taste of the system by entering data based off of pre-populated budget that you would have gotten up and ready for them in the system. Over time, I'd say you really can add value and grow your user base, because if you approach it like creating catered dashboards for even execs or revenue personnel like your sales team, there really is a value add to a user, just being able to log into something and have their KPIs right on the screen there for them.
Okay, all right, that's great. You've mentioned integration with ERP systems. What data do you bring into the system for it to work properly?
Okay, that's a good question. We start off by bringing your general ledger data from your ERP system. So this really serves to get you up and running with the modules needed to accomplish your financial reporting, as well as put together a framework that you would use for budgeting. And that turns later on into having framework for a budget versus actual analysis going forward. We also put through personal data from your HR system to facilitate the creation of a bottom-up personnel plan. And lastly, because you really have the flexibility to be as detailed as possible in the way you approach budgeting in a CPM solution. So we can bring in data from your CRM system, and you can budget revenue from a level of detail that you wish to budget at.
That's cool. I didn't even know that, and I work there. What ERP systems do you integrate with?
We really integrate with pretty much all of them. We've been around for 35 years, so we've kind of really fleshed that out. So a lot of the common ERP systems that you hear about, we've definitely connected them multiple times. So we have a very seasoned professional service team that has, they share their knowledge with integrating to various systems. So it's rare that we'll encounter, let's say, a new ERP system that we haven't integrated to. But even if we do, we have a huge knowledge base to get that all set up for a customer or client.
Okay. We've seen how COVID-19 has really affected people's businesses. And I'm just wondering if, if there's any sort of feedback that the audience can talk to us about as far as what COVID-19 has done to their business.
Yeah, maybe what we can do is in the chat, let's say if you had a different, let's say, planning approach in the last year, let's hit a yes or a no in the chat.
I love technology, but it can be a little awkward at times. I'm not seeing anything come in. Kasha, what would you say is one of the, I think Wayne explained it very, very well, but from your experience, like, what is the beauty of getting corporate performance management in place?
I think the beauty of this is you kind of, we all know that we have a lot of, talented people on our finance teams, but so much of their day may be spent on just being in the weeds of the data that they don't even have time to analyze or come to conclusions that help strategically. So with a CPM tool, you kind of take that first, you're kind of catching, because we all know for a business, like business needs grow as you scale, and the complexity of your data also grows. But sometimes we don't realize that our technology isn't catching up. So it's better to be, to kind of try to bridge that gap. So that's what CPM really does. I'd say the value add is you can kind of cater to any sort of audience. So someone in your finance team, you're in that data every day. So you're probably going to be really involved leveraging a CPM tool, but you can really get any user from your company involved as well. So someone like a sales manager, they would also, find their way in Profix because they get enticed by a really cool dashboard that shows them KPIs relevant to them. So there's really a lot of flexibility for rolling it out because there's so much value to be had at looking at that level of analysis you can get from CPM.
Something that's struck me during this past year is I think all of us were very concerned that COVID would stunt our business and would make it, almost like an unnecessary tool. And it has been surprising how many customers have come back to us and said, by using a tool like Profix, we have really been able to better gauge and better anticipate what our financial prospect is going to be for the year. Would you agree with that, Kesha?
Yeah, absolutely. I'm actually, as you were mentioning that, and I kind of had in mind the question from earlier from Dalton, kind of circling back to, I guess, the return you can see on a CPM software. So I have this one client in mind. You can think of them as being like a provider of like healthcare products or skin products, that sort of thing. So they really saw that return on investment with a CPM tool because before they had a tool like that, things like inventory planning was not so flushed out. So they would end up losing money on inventory kind of misplanning. So the value that they got of a CPM software is that they were able to do that more detailed. So there's a lot of, you can see returns on a CPM software in that manner, which is really important in a time like this, because you kind of look at a lot of detailed variables of where can you do better from a revenue side, from data, money coming in, but also from expenses side as well.
And one sort of question I'm just going to throw out there, to sort of round out what I've been thinking about is, can you just talk a little bit how, Profix lives primarily on the cloud, and how has that helped businesses as a rule?
So absolutely. So if you're not familiar with using platforms on the cloud, then you're probably familiar with the struggles of having to connect to a virtual private network, potentially an RDP, and there's so many steps before you can actually get to where you need to go. Whereas when you have an interface on the cloud, that means it's kind of accessible to you on your phone, on your tablet, on your computer. There's no additional steps needed to get to where you need to go. But at the same time, you know that you have the security, that everything is protected, just as it would be with like a VPN or that sort of a thing. So saves you time, but you also have the assurance that everything is protected.
That's great. Unless we have any questions, I think that's pretty much it for us.
Great. Thanks, Catherine. Thanks, everyone, for tuning in today. It was great to hear your feedback, questions. Have a great evening.